There we go. We are up. Tuesday, January 4th, 2022. Gonna throw this out on Twitter real fast just to let the community know we're up and running. How is everyone doing today? Share to Twitter. Share to Twitter. There we go, got all our tags out there. My money is on Simon being first in the chat. So Simon is really consistent about jumping in with that first comment of the live stream. AMC is catching a little bit of support here, starting a little. It did start a rather nice run here a little bit after noon. Nice run up, pullback. These two, this candle and that candle, that is a serious trend break right there. With the exception of this, the early run up, we did see larger candles there. And how far back? Yeah, when you look at the surrounding candles, you're not seeing any huge spikes like that. Wonder if that was a quick in and out for someone. We're looking at 102,000 volume and looking at 280,000 volume. Hey, Toad was the first one in chat. Welcome to live stream, man. Ooh, what's this? Oh, that is somebody else. Okay, let's go and close that down. How is your day going, Toad? It's not looking like too friendly of a day in the market. Certainly looked a lot better earlier. We did have PROG running up. I think it was testing the 230 mark. Yeah, PROG ran up 231 today. That's definitely nice to see. I'm waiting for. Was looking something over. Simon had asked questions about picking different. How do you pick stocks? How do you go through and figure out what you're going to trade in? And he wanted to know outside of meme stocks. He's like, how do you pick a regular stock? First day back to work after months of sickness. Oh. Well, sorry to hear that, but glad you're feeling better, man. Ford is just killing it. That is a lot of people like Ford as a stock. I know Clay likes it. Riptide is in Ford. I'm in Ford. My average on Ford is killer. Riptide and I are both below $13. Hey, Outdoor Smile. Happy New Year, man. Welcome to the stream. I don't believe I saw you in here yesterday. Yesterday was a weird day with Clay having issues with his mining rig early on in the day. It kind of threw a couple people off on their rhythm for the day. Yeah, if these were the puts we were looking at for February, yep, they are definitely way down right now. Just, I'm not sure with Ford how much of a run it's going to continue to go on. let's jump on the call side of the house. Just kind of have a look here, bounce around. Apparently there will be lots of failed covers on AMC for January. On the 21st. Hey, Paul, welcome to the live stream, man. Well, I know someone had posted a report that there looks to be 400,000 failed to delivers on AMC. It was one of the market beat news reports. Haven't delved much into it. The thing is, the short shares have not covered. They can post whatever fluff pieces they want. They can try to manipulate the masses, play that psychology game against everyone. The fact of the matter is, if the shorts haven't covered, it's still alive. So let's go over AMC options. Call side of the house looks like the 29s have definitely stepped up. I know yesterday wasn't anywhere near this, so it is looking that people for the end of the week are looking for a push up to the 29 to 31 range. Just looking at the options chain, some of this could just be day traders looking at the dip down and figuring with a dip down like that, it's going to catch a nice bounce and come up, and those are in and out option positions. So that's no surprise there to see a quick pickup like that, especially with the downward push we've had today. Let's jump out on the 5-minute. So as you can see, the upper soft channel, we did break through on that this morning and have been running below it. We're holding in we're in the top half. The top half of this little warning zone. I still think the 2250 is going to hold up as a nice hard line of support right there. There'll be no more shares to borrow or short. Yeah, that's, and that was something we were talking, it didn't get touched on in Claybro stream, but he was talking about, people were asking, could this continue on into 2023? And, technically it can keep going on, as long as the shorts are out there and as long as the apes keep holding. The thing is, cost to borrow will eventually catch up with them. The longer this drags out, and as long as the apes hold their resolve, that means that we'll be going through, and every week, every month, as it drags on, we'll be acquiring more shares. We'll be holding more, and if we're the ones who are holding them and not selling, that means that, for lack of better terms, the rotational shares, the shares that are getting bought and sold every day, the volume we see fluctuating, less and less of those will be available. So the longer this drags out, as long as the apes keep acquiring and holding, there's going to be less of a supply. That means, as utilization goes up, as cost to borrow goes up, it increases the risk to the hedge funds, and that increases the potential of them getting margin calls, because a lot of it comes down to, as the volume goes lower, the days to cover increases, and the days to cover is what their risk is based off of. The days to cover, and how much is the cost to borrow. Hey, Pugnacious, welcome to the chat, man. Happy New Year. So yeah, and it really does. If you see the title of the stream, where do you see your shares, or where are your shares going? As long as your shares are going nowhere, if you're the one holding the shares and you continue to grow your little stockpile of diamonds and those little carbon nuggets that you're waiting to turn into diamonds, as long as you continue to hold those and your shares aren't going anywhere, as long as we hold, we control. That's the key thing about it. It's when there's a breakdown, when paper hands get shook off. It is a bad thing when paper hands get shook off, because that's increasing back into that rotational cycle of shares. It's increasing the volume that is openly being traded. But if we hold, if you know where your shares are, if you keep your shares on lockdown and keep adding to them, that is less of a revolving supply that's open for shorting. And definitely go through, make sure that the brokerage you're using, if it's important to you, make sure that you turn off share lending. Now, some people will have their share lending on because their brokerage may actually pay them interest. Hey, Danelle, welcome to the live stream. Some brokerage will pay you a portion of the interest of the money they take in from share lending. Some of them do put that money back on the actual shareholders. So it all comes down to what type of holder are you. But yeah, so AMC has dipped down. Now, we are in this zone right here. This is a higher risk zone when it comes to playing the low side, the bull put spreads. This is a dangerous zone depending upon your entry point and what you're looking at as your exit point, or if you're looking to hold through duration on the week. So if we look, we are holding 24 right now. So we're just going to kind of pop over. We'll check those bull puts out. 34 on the puts, and we were looking. So let's check the 23-24s, because that is our current safe zone right now. Oh, looks like we just had a little bit of a bounce up. Yeah, we're teetering right on that line right now, so this is going to keep moving on me. So the 23-24s, which is the next little buffer level under where we're at right now, we're right in that 25 zone. So looking at it, you're looking at putting up $100 collateral, of course, because difference in the strike price multiplied by 100, so $100 per share per contract. And currently, it looks like it's bouncing between $28 and $30 premium collected per contract. So that's a fairly decent risk to reward. It just depends how far you're looking for it to go. Let's see, Danelle, Toad, glad you recovered and doing better. I was going to buy more shares today. Should I wait? That is the question each person has to ask themselves. It depends what you're looking at, because when you look at where we were, 2 months ago, we were up in the 40 range. I think we tagged up to 45, 46 during that time period. So $15 a share less right now. And if you're, me, I like that nice round number. If you're looking at $1,000 investment, you can go in and set yourself a limit order to where if it drops down to 25, pick up 40 shares at 25, even 1,000. So it is, what is your risk? What are you comfortable spending? It's certainly the point where I'm at right now. This would definitely be an average down for me. And Paul says he'll buy more at 20. Yeah, definitely 20 is a phenomenal place to buy at. $1,000 picks you up half a rack for $2,000. You pick up another little diamond nugget right there, another 100 share block. So yeah, 20 is definitely a great price. If we go back in though, we did get down to 2080, which was that little punch through. That punch through that it was definitely a good place to get in, but if you look and see, it was a 15-minute spike. It was not sustained. If you set limit orders and you have it set for, if you set a limit order for $20 a share, and you catch a quick spike like that, a 5-minute spike, a 15-minute spike, it definitely could be an absolutely amazing fill. But if you go back through the history and look Look at those lines we've got. Where are we hitting 20 again? Where are we hitting 20 again? You have to go all the way back before the 72 rip to see a share price at $20 a share. So yeah, that is definitely a good place to look at, Paul, for picking up more shares. But you might set a $20 limit, and it could run down, hit $20.15, and turn around and run back up, and that is that is part of the risk. You're taking a chance on all of it, but yeah, $20 is certainly a great price to get in at. And if we got down to 20 again, I would certainly, now that the holidays are over and everybody's gone through, all the holiday shopping's done, Black Friday's over, and people might have more money to throw in the market. People might have been stockpiling, waiting for January runs. So it is possible that if we see a spike down to 20, that we could bounce right off it and not stop. We could blow through all these lines and all these colors and all these records, and that of course would be wonderful for the community. I don't know about y'all, but I would certainly I would not be opposed to a spike down to 20 if it resulted in the MOS kicking off. Give me a second here. Got to check my work phone. Okay, got those. But yeah, it's a lot of red in the market. How bad is the SPY looking? Let's go back into the 1 minute. So it looks like the SPY opened with a pretty decent gap up, and it pulled back to fill, and is not too far off where it was trading yesterday. So the SPY being red is just a result of a gap up at open and a pretty normal pullback to fill up, to fill the gap. Now, not all gaps have to be filled. They tend to be filled. Sometimes they get filled, the same day or next day. Other times, gaps can actually stay open for a couple of weeks. Was that Clay on? No, that was not Clay on the phone. That was actually my work phone. I was bringing up my work program to see how long is left in lunch. So PROG is teetering on that 225. And this is kind of a continuation. If we look back to New Year's Eve, we did have that run up, that spike almost to 240, pull back through the day, started the New Year low with a little bit of a run up, and we're a continuation of that run up. But we're still in that fairly good zone. When you look at the, why do they always make it look so wonky? So if you look at the two channels here, we're out of that discount zone, and we're right at the bottom edge of that buy zone. So we're as my charting, this is going off my personal charting. What I look for, especially in PROG as a potential swing trade, we're still in a buy zone. And waiting for enough buyers to step in to push us up into that sell zone. If we get up close to the $3 mark, of course PROG is one I'm not looking for options. PROG's never been friendly with me when it comes to options. For me, it's always been better as a stock trade, not as an options trade. And what do we got here? And it looks like I got a scam from Wells Fargo. Hey, Wells Fargo, thank you for the scam. Delete and block. Yeah, I'm actually, speaking of Clay, I am actually waiting on waiting on the T-shirt to show up from the holiday giveaways that we had, or that that he was putting on. Kind of interested to see what color T-shirt I'll be rocking. So what is everyone else up to? I usually ask how people are doing, if they have any good trades, if they see any, because I have no problem with sharing input and stuff that I look for, and if people definitely have something that they want to look at, or just this channel is not about confirmation bias. I will always try to give the best technical analysis I can. And if a stock looks good, I'll say, yeah, that to me that stock looks good, or nope, that is a Mr. Grinch. I wouldn't touch it with a 39.5-foot pole. But yeah, I'm kind of checking. I want to have a look and see how the rest of the portfolio has been doing. There's been news on some of the stocks. Looks like AMC is catching bounce, trying to come up to 25.25. SPY is down. Q is down. Let's go back in on the 1 minute, and I want to kind of have a look at. I already know the SPY and Q are down. I do not have access to the IWM. Let's do Russell 2000, home of AMC. So it also saw a little bit of a gap up in open, push back down, and currently is fighting back. Pugnacious has not looked at the stock market this year. Well, Pugnacious, if you're comfortable in your positions and you're not doing any active trading, for the most part, you can just kind of to listen on streams, but you don't have to open the market. And that's one thing I let people know is, especially when we had all that, all those weeks of red. If the red is too much for you to look at, just turn it off. You don't have to, the stock market isn't something you have to babysit unless if you're actively day trading, or if you have swing trades you want to keep an eye on. If you're looking for entry points, for either stocks or for options, of course monitor the stock market. But if you don't have anything going on with it, staring at stock prices is not going to make them move one way or the other. It's a living beast. It's going to move on its own, and you don't have to babysit it. So yeah, there's the Russell 2000. Let's bring up the Qs. There's the Nasdaq. Nasdaq did not have a gap up. It just straight started to push down. Started trading sideways. It's got a little bit of a channel going on here. Looks like right about 394 up to 396. Nice little channel it's bound in right now. And Shib. What is up with Shib? Shib on a little bit of a downward trend. Downward trend, also known as discounted. Doesn't all look horrible in the market. Quite a few things are up right now. Let's see. Let's get back over here. Oh, there we go. Oh, Realty Income. That is a nice little run up. That's a continuation run up right there. Let's pop out on the 5 minute. So it looks like Realty Income had a little bit of a push down to start the year, and since then, when did it bottom tick here? So that was yesterday about midday. Yeah, yesterday midday got pushed down, and ever since it's been running up. That is not a bad little runner back. They're recapturing the losses because go further out. What month are we on here? This should be all through December. Nice upward run. A little bit of a dip here. that was a weird little valley right there. It almost looked like it just wanted to continue on an arc and start running back up, but somewhere in there it got beat down. Had a gap down, ran sideways, gap back up to pretty much where it was before. Continued to run upwards. This is one of the ones that I keep in my portfolio. This is a long-term dividend stock. And if you've got a dividend stock that pays you fairly consistent dividends, and you continue to see growth about it, that's just to me, this is one I definitely look to hold for a while. In fact, yeah, it's doing pretty good. Even with pending dividend. No, I'm trying to remember if this is a monthly dividend stock or if it's a quarterly. It never hurts to look at other ideas, other stocks out there. It gives people ideas. This is a monthly dividend stock, and so the share price between $70 to $75, and it pays out 24.5 cents per share dividend. So that's not a bad little investment there. Let's pop over, have a look at Gamestop. The granddaddy of meme stocks. So yeah, seeing a push down on Gamestop, a push down into sideways trading. What is the ticker on Realty Income? That is the ticker O. Yeah, that's just one of those ones that a lot of times, yes, when a company pays out a dividend, you do see a little bit of a dip in the share price. But looking at that stock, let's go back over to it. Yeah, that is part of the thing by dividends. That is also why I think why Credit Suisse wasn't doing that good. Yeah, that's a monthly dividend stock. That is 24.6 cents per share monthly dividend. Didn't realize I'd be dropping that kind of knowledge on y'all, did I? So even, this is the daily chart. And if you look, how far back was that? So can we get... Okay, so all the way back to that nastiness. We're just going to call it the nastiness. If you look at it, when it started to stabilize, which was probably right here about the 52.25 level, even with the dividend, stock still went up. Dividend, a little bit of a dip, pullback, upward trending on the dividend, upward trending on the dividend, pull back a bit, upward trending on the dividend. Looking at the price action of this stock and the fact that it's continuously gone up, since March of last year, or not last year anymore, March of 2020, as you can see, it had the same chaos that the rest of the market did. But after that, you're seeing continuous growth through here. Continuous growth with a decent dividend. They're consistently paying out. Let me go. I can actually bring up and review the last year. The last year of dividends. And for checking the last year dividends, I just go to the Nasdaq, www.nasdaq.com. That is what I use for checking my ex-dividend dates, checking dividend payouts, part of doing the research of long-term investing. So let's go back to, we can actually go quite a ways back. For the longest time, even back, so from the start, January of 2020, we see 23.3 cents per share, ran that way for a couple months. 23.4 cents per share, ran that way for a couple months. 23.5 per share, 23.5, 23.6, 24.6, 24.7. And that was into last month. And now this month, the dividend, let me double check this again. This month is 24.6. So yeah, this is a monthly dividend stock that over the past 2 years has slowly been growing its dividend. So it's paying a growing dividend, consistently over the past 24 months for the most part, and their share price has been growing. We look all the way back, looking anywhere in this range right here. It's below $52 a share, and currently it is trading at $72.23 a share. So, a pretty solid investment. So yeah, pugnacious. That out of I was talking about how to build ways to look to build a long-term investment portfolio after the MOAS, and I was talking that if you find 6, 7, 8 key stocks that pay out decent dividends, and I believe the numbers were right about investing about $250,000, 250,000 post MOAS into key stocks that you could potentially get a $3,000 a month income just off of dividends. And this is just part of that homework that's involved in long-term investing. So yeah, I am not just I'm pretty good at options. I've done a lot of homework on options, but by no means am I a one-trick pony. I've got if you take out PROG and AMC, I've still got a 30 position long-term investment portfolio that has I've got the Qs, I've got the SPY, I've got the Vanguard real estate, and then I've also got a short-term bond position that I'm in as ETFs. So 4 ETFs, 26 stocks. That's a portfolio I maintain as my long-term retirement, because if MOAS doesn't go the way everyone's hoping it does, well, I've still got to look towards retirement someday, and that's why putting in the time, doing all the homework, doing the research, that's just part of it. Hey, I gotta grab me a soda real quick. So what is everybody else up to? Hopefully I didn't bore too many people with that with my dividend rant. Not really a rant, but just I like stocks, I like options, I like cryptos, I like it all. Paul says sounds good. Yeah, that's nobody knows how high the MOAS is going to go. All the people who are playing, a lot of people say, when's the Lambo? I'm going to be a millionaire. This and that. None of that is guaranteed. A specific share price, a specific step out, is not guaranteed. And that's why it's good to have a plan B, a plan C, a plan E. Have contingencies in place for if you don't get as much. Toad asking, if a company paid a decent dividend, but over the long term its share price drops, would you keep the? No, that I actually. It would have been the first week of live streams that I was doing. I was checking my Credit Suisse ETNs, not ETFs, ETNs are an exchange traded note, and I had gold, silver, and crude oil, and they were paying amazing dividends. And I was watching the share prices, and the share price drop was actually outrunning the dividend they were paying. It was unsustainable. So I end up when I got out of those positions, I think I was just like 2 or 3 days away from the dividend being paid out. So I captured that last dividend. I did actually. I ended up just a little bit, fractionally up in the difference between the share price drop from the dividend and the dividend I collected. I did end up getting out a little bit up on that 3 day swing rather than getting out immediately and not taking the dividend in fear of the price dropping. I took a risk and it paid out for me, but it was not sustainable. I'm $1,000 air. Paul, $1,000 air. Let's see. Did I miss anything in the chat? I don't believe so. Going over multiple devices right now. AMC, keep running, keep running. Get those share prices up. Recapture this 26. Oh, okay. Not a millionaire, a thousandaire. I gotcha. Yeah, that one did go as to opposed to a millionaire. Yep, Toad got it. Yeah. My wife has the rest. Yeah. A lot of there are a lot of different people out there who there are a couple other YouTubers that I follow, and they actually do dividend analysis. Average Joe is the main one that I watch, and he does a lot with dividend stocks, and I try to I look at how he goes about his analysis and everything, and I try to that's kind of where I learned more about how to build for dividends, and I actually shifted part of my portfolio over more towards dividends than just through trying to get share price, trying to get overall overall growth. But I started looking more towards dividends and dividend reinvesting. And so, yeah, that was definitely a channel that helped me get a little bit basic knowledge and helped me apply it to, how I like to invest anyway. Yeah, Average Joe. I have no problem with giving a shout out to other YouTubers. I hope that, oh, and let me, that's annoying. Oh. Oh, give just a second here. Phone. Okay, I am back. Sorry about that. I'm clay phone like bat phone. Yeah, give me a second here. I don't know how well you'll be able to see it. Yeah, his channel is The Average Joe Investor. And yeah, if you're looking, if you're looking into dividend stocks, definitely worth checking out a couple of his videos. He does a lot of he does comparisons between ETFs also, exchange traded funds, like covered call ETFs and QYLD versus QYLG, RYLG, for the Russell 2000. He does a lot of good analysis, a lot of numbers crunching. If you can handle a lot of number crunching and just running through data points, if you can handle that, it's a great channel for for getting extra knowledge. But yeah, I certainly like checking out his videos. Another one is Joseph Hogue. He does he does a lot of videos on eight stocks that will help you buy a new cell phone every 3 years. Stocks that you earn enough in dividends over 8 years to where if you hold these stocks with this much money, you'll make this much money over that much time. So yeah, it's they're definitely some good channels, and I know Joseph Hogue. I think he does live streaming. I think like maybe once a month on the weekends. I'm not sure his exact schedule. I caught one of his live streams before. It was pretty good. Yeah, Pugnacious. Me too. I'm all about learning new things. I've stated before, I'm not the best investor out there. There are people better than me. I try to make it entertaining and fun and have a good community for everyone to come into and just kind of hang out, and especially in between Clay Row streams, place for everyone to chill out. Yeah, let me have a look here. You got into Exxonmobil pays 5% dividend. Are oil companies a good investment choice? Oil's a finite resource. Green energy is supposed to be the way to go. Yeah, but a lot of the green energy that they're talking about, you have to. It takes so many hydrocarbons in order for the manufacturing, like windmill farms. It takes so much in the form of hydrocarbons that some of these wind farms will never actually pay their own dead cost of going up and of getting up and running. That's what potentially solar farms might be okay, geothermal, hydroelectric, wind farms. The startup cost for them is so astronomical from stuff that I've read. Let's see, Exxonmobil. It's funny you should mention Exxonmobil, because my total return on Exxonmobil to this point, I am up 14.33% on Exxonmobil on my position that I have. And where are the divvies? Looking through here. Now, ExxonMobil pays a quarterly dividend, and last dividend I collected was 88 cents per share. It is a quarterly dividend, but it's not just. This is one of the ones. It's not just about the dividend. It's about the fact that I've got over 14% growth on that stock. That's just in that's growth from not even an entire year from when I got in there. So yeah, depending on which what you're looking at. If you're in if you're in a good company that doesn't have any issues, every stock has a potential to have a bad run or to have things come up that affect the share price negatively. Long term, even with the EV craze, electric vehicles are still going to require a lot of the moving parts will require lubrication. Gear, grease, oil, all that type of stuff. It takes. Joseph Hogue posted a video: 5 alternative investments you never knew existed. So yeah, oil can be a good investment to get into for the long term. Oh, sorry, sneeze there. Yeah, it is an official live stream. We have eggplants. RELI kicking names and taking concrete. That one sounds familiar. Is that Credit Suisse? Oh, Reliance. RELI, Reliance Global? Oh, thank you, Toad. Reliance Global. Yeah, they're having a nice run up on the day. How are they looking in the long term? Yeah, huge, huge, huge downward trend. And when did they? Halfway through January? Yeah, right about halfway through December. Somebody hit the on switch. Yeah, not sure what's going on with them, but certainly if that's a play that you're in, that's definitely a play that would be killing it right now. Apparently, a new battery for one of the Tesla models is $17. How many batteries are involved in a battery pack? And is that what? Oh, $17,000 for a battery pack for the Teslas? Yeah, I'm sorry, but if you have an electric vehicle and you're in the middle of the desert, or California drivers, middle of the summer, and you're sitting in your electric vehicle in a traffic jam, and knowing that turning your AC on means you're draining the battery that causes your vehicle to run. Um, Minnesota, winters, negative 30 degrees. Those batteries outside, if you don't have a heated garage to put that vehicle in. Paul says, if you guys want, I'll buy Reliance and it'll go down then. What do we got? ALZN. Look at a couple of these. Neuroplay. Alzamed Neuro. Yeah, they're taking off all of a sudden too. Yeah, Pugnacious, I had often debated picking up some oceanfront property in Arizona. Yeah, Toad, there are heated garages up here. A lot, some of them are garages that are attached to houses and really, really well insulated. But yeah, there are heated garages here in Minnesota because when it gets down negative 30, negative 40 sometimes. Mara tennis ball today. Mara, Marathon? Yeah, Marathon Digital Holdings. Oh! Yeah. I have some at Arizona's beach. Yeah, I'd love to get oceanfront property in Arizona. Hardy har har. Holy, yeah, they've ran up 30. Oh, yeah. So they're up around 35. Oh, almost up 35.50. They had a $2.50 pullback to where they are right now. But everyone, it's getting that time. I have to go back to work now. My lunch break is almost over. I want to thank everyone who stopped by the stream today and hung out for a little bit. So of course you have Pugnacious Wrestler, Ugandan Toad, Paul Wright was in here, Danelle. I think I saw DD214 earlier in the chat. I'm kind of just going through the stream, seeing who all was here today. Outdoor Smile showed up for a bit. Yeah. Thank you for everyone for coming by, hanging out on the live stream, spending a little bit of your day here. Hopefully I was able to give a little bit of knowledge out and make everyone's future trades potentially a little bit better. And I will I'll be listening in on Claybro's afternoon stream. I may pop in and say hey to the peeps in there. And hope everyone has an absolutely wonderful day, and I will see you on the next stream.